You weren't supposed to hear this. Not yet. Because what you're watching unfold right now isn't just a Bitcoin crash, it's a controlled release of pressure inside a financial system that feeds on fear, harvests panic, and rewards the people who understand how the game actually works. While everyone else is staring at the price, the real move already happened in the shadows. Bitcoin didn't just fall, it was pushed. And if that sentence makes your stomach tighten, good. It means you're paying attention. Because when something that was sold to the world as digital gold suddenly loses 15% of its value and slices below $61,000 like it was never there, that's not randomness. That's design. If you want real financial truths they don't teach, hit subscribe and turn on notifications. You don't want to miss what's coming. Here's the uncomfortable part. The market didn't panic by accident. Confidence didn't just fade, it was drained. Slowly, deliberately, over months. Bitcoin peaked north of $126,000 back in October, right when the public narrative was at maximum optimism. Headlines screamed inevitability. Influencers promised a straight-line bull run. Retail piled in, convinced they were early. But the people with actual size, the institutions, the funds, the whales who move markets by breathing too hard, they were already repositioning. This week alone, Bitcoin is down nearly 30%. That doesn't happen because of a few scared traders. That happens when liquidity leaves the room. And liquidity never leaves without a destination. Watch how the story is told to you. They say Bitcoin is failing to live up to its promise. They say adoption is weak. They compare it to gold and point out that gold is up while Bitcoin is down. They frame it like disappointment, like a broken dream. But disappointment is just the emotional wrapper. Underneath it is a wealth transfer so quiet most people won't realize it happened until years from now. Bitcoin didn't stop being volatile. It stopped being marketed. There's a difference. When the hype machine turns off, price has to survive on capital flows alone. And capital flows are ruthless. They don't care about beliefs. They care about exits and entries, about timing, about who's trapped and who's not. Look at what triggered this leg down. Breaking 70,000. That wasn't just a number. That was a psychological tripwire. Everyone knew it. Analysts called it a key level. Traders watched it like a heartbeat monitor. And when it snapped, selling accelerated. Not because the asset changed, but because human behavior did. Stop losses fired. Margin positions imploded. Forced liquidations ripped through accounts like a scythe. Over $2 billion in crypto positions have been liquidated this week alone. Think about that. $2 billion didn't vanish. It changed hands. From the impatient to the patient. From the leveraged to the liquid. From the emotional to the cold. And here's where it gets darker. Institutional demand didn't just weaken, it reversed. The same players once credited with supporting Bitcoin are now net sellers. Exchange-traded funds that were buyers last year are dumping supply this year. That's not betrayal. That's cycle completion. Institutions don't marry assets. They date narratives. And when the narrative stops paying, they leave. Bitcoin breaking below its 365-day moving average isn't just a technical event. It's a signal. The last time this happened was early 2022, right before a deep bear phase. Since that breakdown, Bitcoin has already fallen more than 20% in under 3 months. Worse than that earlier collapse. That tells you something important. This move is faster, sharper, more surgical, because the market is more mature now. And maturity doesn't mean safety, it means efficiency. Fear travels faster. Liquidations cascade quicker. Media narratives synchronize almost instantly. When stocks sell off, crypto follows. When tech bleeds, Bitcoin bleeds harder. The old myth that Bitcoin moves independently, that it's a hedge against chaos, that story has cracks all over it right now. But here's the part no one wants to say out loud. Correlation isn't failure, it's exposure. Bitcoin isn't being rejected, it's being repriced, and repricing is what happens before accumulation, not after. Most people only understand price as a scoreboard. Up means good, down means bad. That's how retail is trained to think. But price is also a weapon. Push it low enough, fast enough, and you force behavior. You trigger fear, you flush leverage, you shake conviction. You make people sell not because they want to, but because they have to. That's what forced liquidations are. Automatic surrender, code executing fear at scale, and every liquidation is a gift to someone waiting below. Look around the broader market. Tech stocks are sliding. Risk-on assets are being punished. Even precious metals are volatile. Silver plunges, gold wobbles. This isn't about Bitcoin alone. This is about liquidity tightening across the system. When money gets scarce, everything that isn't nailed down gets repriced. And yet, listen to how calmly the insiders speak. They say Bitcoin is now trading on pure liquidity and capital flows. That hype is gone. That the story lost the plot. Translation? The tourists are leaving. And markets love it when tourists leave. Because tourists panic. Professionals prepare. There's a reason these moves feel violent. It's because they are designed to feel that way. The human mind is the real battlefield here. Not the blockchain, not the charts, your psychology, your tolerance for pain, your ability to sit still while everyone around you screams. Media plays its role perfectly. Every headline reinforces doubt. Every comparison to gold sharpens the sense of failure. Bitcoin down 40% year over year. Gold up 61%. See, they say? The experiment failed. Move on. Forget this ever mattered. That's narrative engineering. And it works because humans crave certainty. They want to believe they missed it, that it's over, that there's nothing left to do but walk away. That's exactly when positioning happens. Crypto whales don't buy green candles. They buy red silence. Institutional money doesn't chase hope. It exploits despair. The quiet accumulation phase never feels exciting. It feels wrong, lonely, embarrassing. That's how you know it's real. Understand this. Bitcoin falling back toward its pre-election levels isn't regression. It's normalization. The election hype was temporary liquidity. Once it faded, price had to confront reality. And reality right now is that global markets are stressed, debt is suffocating, currencies are quietly decaying, and central banks are trapped. This is where the deeper truth lives. Fiat money is losing purchasing power slowly enough that people don't riot, but fast enough that savings rot. That's the real silent reset. Not a crash, a grind, and assets like Bitcoin exist inside that system, not outside it. They don't magically escape monetary gravity, they amplify it. So when Bitcoin drops 15% in a night, it's not disproving itself. It's showing you what happens when an asset designed for scarcity collides with a world addicted to leverage. Retail investors are mentally trapped here. They're taught to buy highs and sell lows through emotion, not logic. Fear tells them to exit when pain peaks. Greed tells them to enter when risk is highest. And every cycle, the same lesson is offered. Most people refuse to learn it. Ask yourself something uncomfortable. Who benefits when confidence collapses? Not the person selling in panic. Not the trader getting liquidated. Not the long-term believer who capitulates at the bottom. The beneficiary is the entity with patience, cash, and no emotional attachment. That's why institutional demand reversing doesn't scare the people who understand cycles. It confirms the phase we're in. Distribution ended months ago. Now comes despair. After despair comes boredom. After boredom comes accumulation. And only then does the next story get written. Bitcoin underperformed gold this year. That fact is being weaponized to kill belief. But belief isn't required for price to move. Positioning is. And positioning is invisible until it's too late to join. Think about the language being used. Growing pessimism. Losing interest. Failed to materialize. This isn't analysis, it's emotional conditioning. It prepares the public to accept lower prices without resistance. It numbs the shock. It smooths the path for large buyers to operate without attention. Because attention is expensive. Silence is cheap. This is also why other cryptocurrencies are collapsing even harder. Ether down 33% in a week. Solana hitting multi-year lows. XRP bleeding. These moves are telling you where speculation lived. And speculation always dies first when liquidity retreats. Bitcoin is being treated as just another risk asset right now. That's intentional. Strip away its mystique, make it boring, make it disappointing, make people question why they ever cared. That's how you reset expectations. And here's the twist most people miss. The same forces pushing price down are the ones that will eventually push it back up. Not because they love Bitcoin, but because they understand optionality. In a world of debt, surveillance, and monetary decay, an asset that can't be printed still has strategic value, even if it's volatile, especially because it's volatile. Volatility is a tax on the impatient and a subsidy for the disciplined. So what's the warning here? It's not buy now or sell now. That's surface level thinking. The real warning is this: if you let headlines dictate your emotions, you will always be late. If you confuse price movement with truth, you will always be manipulated. And if you believe markets are fair, you will always be food. This sell-off feels brutal because it's meant to cleanse, to shake out leverage, to punish certainty, to remind everyone that no asset goes up forever and no narrative survives contact with liquidity. But nothing about this is random. The levels matter, the timing matters, the psychology matters, and the people who know that are already positioning for what comes next, quietly, patiently, while everyone else argues online about whether Bitcoin is dead. Ask yourself one final question. If Bitcoin truly had no future, why does it require so much effort to convince you of that? Because the most valuable information never arrives with fireworks. It arrives disguised as disappointment. This feels illegal to know because it isn't taught. It changes how you see money because it reveals the game underneath the game. And once you see it, you can't unsee it. So here's your challenge. Do you react like the herd, or do you observe like the predator? Do you let fear make decisions for you, or do you study who fear serves? Tell me in the comments what you think this drop is really about, not the headline answer. The real one. Send this to someone who needs to hear it. And if you're ready to understand how power, money, and psychology actually collide behind the curtain, subscribe now and turn on notifications. Because the next move won't be announced.